So our co-sponsors today are the University of Minnesota Extension, the Community Action Partnership, Prepare and Prosper, Legal Aid, and Taxes 101. The webinar today is being recorded, and it can be accessed along with today's training materials at Help MN Save. I'm Ellie McCann with the University of Minnesota Extension, and joining me today is Claire Trolley and Taylor Putz, and I will let them introduce themselves when they begin. Today's webinar, we are hoping that you will begin to understand who can and should claim children when they are filing taxes. Also ways to identify practical communication strategies for families and to become familiar with tax filing resources. There's going to be some opportunities for engagement through today's webinar. We're going to have some chats, which is at the bottom right-hand corner of your screen, and we will also be taking some polls. In the chat, there will be questions and comments, and during the webinar at any time, please feel free to chat, and we will be watching the chat so that we can hopefully pick up and answer all of your questions and see all of your comments. But if we are unable to get to all of your questions or comments today, we will send you an email with a response. We're going to start with our first poll, and you'll have to bear with me because I put all of the polling questions together. So the first polling question I'm going to open, and we would like for you to just answer question number 1 to begin, which will tell us who you are. If you're a VITA volunteer, community action program staff, community agency staff, university or higher education staff, or other. All right, so it looks like we have people that are VITA volunteers, community agency staff, university staff. So awesome. We have a wide variety with us today. So first of all, I'm going to start by kind of setting the stage for our webinar today. And I'm going to go through 3 different scenarios that may be possibilities that you encounter in your work with families. So the first scenario is a mother comes into a VITA site to get her taxes prepared and filed. She answers all the questions on the intake form regarding her dependent children, and the volunteer determines that she clearly has a right to be claiming the children as they lived with her the full year, with the exception of occasional weekend visits with a non-custodial parent, and she provided all care and basic needs for the children. She files electronically, and the return is rejected with the error message that these dependents have been claimed on another filer's return for this filing. Our next scenario is a father who comes into the VITA site to get his taxes prepared and filed. He answers the questions on the intake form, and it sounds as though he and the other parent have equal custody, shared 50-50 in both time and expense. He hasn't claimed the kids before, but he wants to this year, and has come in early in the season in an attempt to file before the other party. He was never married to the other parent and has no formal agreement on who claims the children. Our third scenario are grandparents who come into the VITA site to get their taxes prepared and filed. They list 2 grandchildren and dependents and state that the children have resided in their care for a full 9 months in 2016, and the parents have not been in contact or provided any financial support during this time. They file with the grandchildren as dependents, and it gets rejected due to another filer already claiming these dependents for the filing. Now in the chat box, if you can please share some of the situations that you've encountered where there has been disagreements or uncertainty on who should claim children on their tax. Maybe if one of these scenarios sound familiar, you could type in 1, 2, or 3. All right, I'm going to turn it over to Claire.
Good afternoon, everyone. My name is Claire Trolley. I'm a family law attorney here in the Twin Cities. I'm also a Parents Forever facilitator. So we're going to kind of go through with what would likely happen with the scenarios that Ellie described earlier, which are pretty similar scenarios to probably what you are likely to see as tax filers. So anytime two people attempt to claim the same child or children on their tax filing, it's always going to be the second parent's tax filing that's rejected by the IRS, because you can't have multiple people claiming the same child or children as dependents. So what that parent can do is, instead of filing electronically, they can submit their taxes by paper through the mail. But then the IRS has to investigate to determine who has the right to claim the dependent. And so if the IRS determines that it was the person who first claimed the dependent, or that the person who originally claimed did not have the right to do so, they may have to repay tax returns and potentially pay the other parent fees as well. For the parent who did have the legal right to claim, their refund is going to be delayed significantly because it's a paper filing and an IRS investigation. This will certainly create further strain between the parents since they haven't discussed this. And especially with parents who are depending on that refund to help financially, this could allow for instability for the children. And if this is happening year after year, the IRS can certainly view this as fraud, and this will also hurt the VITA sites if they keep getting rejects on their files. So there's lots of consequences for this to happen. So next, what we're going to talk about is, we had some scenarios where that Ellie had discussed, but now we're going to talk about kind of the facts or the basics on who can or who should claim the children when filing taxes. We're going to be reviewing 3 different scenarios: the default position, what happens when there's an agreement, and what happens when there's no agreement but there is a court order. And then we're going to finish by discussing some IRS considerations that the filers should take into consideration. But first, before we do that, we're going to do another quick poll, and Ellie's opening the poll now. So if you can go to the poll once it's open, and just answer question 2. So the poll is, who do you think can claim the child or the children? A, always the mother. B, always the higher earner. C, whoever your client is, if you're the tax preparer. D, only a judge can make this decision. Or E, it completely depends on the circumstances. So if you can just answer question 2, we'll leave this poll open for about a minute or so. Okay, so good. Most of you saw the answer there. The answer is E. It completely depends on the circumstances. Claiming the children is a very fact-based position, which is why the questionnaires are so important, and also communicating with the clients to see, because it's not always the mother or always the higher earner. It does depend on if there's an agreement or not, and the facts of the clients. So if we go to what the default position, so again, this is what we're going to be talking about. The default position, if there's an agreement, if there's not an agreement, and a court order, and then finally the IRS considerations. So in the first case, the default position, this is when there's no agreement between the parents, either formally or informally. So formal being a court order or something entered with the court, and informal being a text message between the parents saying, you know, you can claim the kids this year, or I'll claim the kids this year. And no court order. The default position is the custodial parent will claim the children on the taxes. And the custodial parent is the parent who has the children more than 50% of the time, more than half the nights of the year, and the kids are with that parent. We'll talk about later what happens when there are on a truly equal basis who the custodial parent is, because then we do look to income. But most of the time with parenting times, there is a difference. There's not an equal time, exactly. There is one parent who has more. So the best case scenario, of course, is that the parents have talked about this and that there's an agreement. The best thing about agreements is that the parents can really make this unique and best for the family. Kind of a standard agreement between parents would be that the parents switch every other year. Between one parent takes all the kids one year, the other parent takes all the kids the other year. Or, you know, if there's two kids, one parent takes one child every year, the other parent takes the other child every year. Or if there's three, you know, they each take one and the third is switched every other year. Those are kind of the standard agreements. And of course, the standard agreements are often contingent on being current with child support. So the obligor, the person who pays the child support, needs to be current. And I always tell my clients, if they're receiving child support, if the other parent is behind, send them an email and say, I need you to be current by January 31st or February 1st. And if you're not current by then, I will be claiming the children even though it's your year. And of course, being current with child support, they have to be more than 1 month behind. Because sometimes with how paychecks work, you know, you can be half a month behind or something, but that's just with how the child support's being taken out with the paychecks. But this is certainly the best scenario, because sometimes even the parents who truly get along the best, they can look at the tax situation, because if it's mom's year to claim, but she would only receive a $500 refund by claiming the child. But if the other parent were to claim, they'd get a $1,500 refund. What the parents can agree is that the other parent claims the child, gives $500 to mom because that was her year, and then they split the remaining $1,000, so they're both up $500. So clearly that only works in a small number of cases, but that is the beauty between agreements, that something like that could happen to maximize the benefit. I see that there's a question. Mother came in with a divorce decree and it said she should claim 2 of the 3 children. The return was rejected as all 3 had already been claimed. We gave her copies to paper file. Perfect, giving her copies to paper file. And we'll talk about next, in the court scenario, what mom can maybe do with that. So if there's a court order, like a divorce decree or a custody order, judges now have a set of facts to consider when determining who should claim the children on taxes. And this is a new statute, a relatively new statute. It came out in 2015. But judges will consider several facts. And the judges were already considering these facts. Now it was just codified into law in 2015. So they'll consider the financial resources of each party. If there's a negative financial impact on not awarding the dependency exemption, if one or both parents would even receive a tax benefit with the dependency exemption, because depending on income, certainly some parents would not receive a benefit, so it makes sense to give that exemption to the parent who would. And then the impact of the dependency exemption on either party's ability to claim a tax credit or subsidy under the ACA or Obamacare, as we're talking about. However, sometimes people will say they have a court order, but they don't have a court order that discusses tax exemptions, especially if it's just an initial child support order. And so even people with court orders with custody or parenting claim, it may not be in there. If it's a divorce decree, it should, or a final custody order, it should, but not always. So to continue with the court order, the court can also place reasonable conditions on the right to claim, such as being current with child support, as I discussed earlier with the agreement. The other thing is a parent with less than 10% parenting time is not entitled to claim. This is something kind of new that came out in 2015. But unless there's an agreement between the parents, if a parent has less than 10% parenting time, they will not be able to claim. And then here, this goes to the question that Amy has. If a parent violates the court order, they may be required to compensate the other parent, the difference in the refund, and pay the attorney's fees for bringing the motion to do that. So with Amy, who had the mother who said it was her year to claim 2 of the 3 kids, but was unable to do so, if something like that happens, a client like that should certainly talk with an attorney because they may be able to help expedite the matter besides just going through the IRS, which we know can sometimes take even longer. And so this kind of violation of the court order, like the other parents in Amy's scenario had, they will now be required to pay additional fees. So that should be something that talking with an attorney or court personnel would be a good next step for that. So finally, to wrap up this section, we're going to be talking about a few IRS considerations that should be brought into while thinking about the filing tax returns. So the first, the ACA or Obamacare considerations. Certainly the person who has the right to claim, you've already determined either through a court order or by agreement that, say, it's mom's year to claim the children, but dad is the one who carried the kids on insurance. So mom and dad are going to have to talk because when mom files her tax returns, she's going to need to show that these kids she's claiming received health insurance that year. So she's going to need to communicate with dad or the other parent and say, hey, I need that 1095 leave that you received to show that you're covering the kids on insurance so that I can submit that with filing. That's one thing that parents are going to need to do extra communication with. The other thing that's going to need that I know has come up in previous webinars is how do we handle ACA or Obamacare issues with claiming adult children as dependents? And the tricky part with claiming adult children as dependents is that it's really factually based. There's not necessarily a standard procedure that it is when it's minor kids. With adult children, you really need to go through the checklist to make sure they're meeting all the different facts. But the kids simply having their own insurance would not automatically eliminate a parent from claiming that adult child, especially if they meet all the other requirements. So that's really something that the filers are going to need to look through carefully to make sure that it's done correctly. The other thing with IRS considerations is if parents do have exactly the equal number of days, what I do in my divorce decrees is in the holiday chart, I include a tax day. So with that, the parent does have exactly one more day than the other parent with that child to claim for taxes. So if there is an IRS audit or a question, they can look to the divorce decree to see that, yes, dad can claim, Tommy because he had Tommy on that tax day, and mom can claim Melinda because she had Melinda on the tax day. But if the other thing is when we are looking at exactly equal number of days, the custodial parent is considered the parent with the higher AGI if we don't have some sort of court order. The years that the non-custodial parent is claiming the child, either because the parents have an agreement or there's a court order, an additional IRS form must be filed. This is the IRS Form 8332. A judge can order or require parents to work with this, but what needs to happen is that the custodial parent needs to fill out Form 8332 to say, yes, it's true that non-custodial parent gets to claim the child or the children this year. You can fill it out for multiple years, but you never know, something could change. So I always, one thing to think about is to just do it 1 year at a time to fill out that form. But then the non-custodial parent needs to file Form 8332 with their taxes. And as we saw with the scenarios, when the IRS becomes involved, it's usually because both parents are trying to claim the same child or children. And it's always that second parent who has the problem. However, a lot of times that can be eliminated if parents just communicate a little bit better with each other. And so Ellie's going to walk us through some communication strategies so they don't run into that issue.
Thank you, Claire. So I'm just going to walk us through, as Claire said, some things to keep in mind if some of these issues do happen between co-parents. I think one thing to remember is that when these issues do arise, it can be nearly impossible to have a cooperative co-parenting relationship if you are always in conflict with the other parent. Oftentimes, anger can play a big role in some of these situations, and if a parent that you are working with is angry or is stuck in anger, and needs to communicate with the other parent about a tax issue, you might suggest that they wait until they calm down before talking to or communicating with that other parent so that the message is not filled with angry statements. So maybe it's just saying, you know what, after you've thought this through, maybe tomorrow would be a good day to give the other parent a call. Conflictual parenting is really been shown to be the worst scenario for children because oftentimes children end up in the middle of conflicts, and if the issue is a tax issue, it is a parent issue, and the child should not be involved, just like any other adult issue. Even by passing along communication between the two parents, like a form they need to sign or whatever it may be, that is a really stressful situation for children to be in, and children need to be out of the middle of those adult conflicts. It's important for parents to learn some strategies for managing conflict with the other parent, because really in the end, the whole family is going to benefit. One source of anger may stem from parents having different approaches and responses to conflicts. As a professional, have you worked with parents and where one parent is highly conflictual and the other parent seems relatively calm? It can be kind of a hard dynamic then to work with when you're attempting to solve problems between these co-parents. So let's talk about some additional things that you can work through in regard to this relational kind of conflict. So it's not just what you say, even if you try to control your body language, sometimes how you are using your voice gives away how you are really feeling. So I'm going to open, if you could answer question number 3. Have you ever worked with a parent who seems to be stuck in anger? This may be they just don't want to move ahead, some really negative comments towards the other parent. It could be for a variety of reasons, but I'm just curious if any of you have worked with a parent who just really seems to be kind of stuck with that anger. All right, so it looks like most of you have. Possibly not all of you, but it looks like most of you have. So I think one thing to really remember is that sometimes it's really a lot easier to control your words than it is to control your body language or your style of voice. So that's important to remember as you're working with parents through some of these issues. Also, listening within communication is a huge component. So some of the things to think through with the parents you work with is that good listeners tend to get rid of distractions. You know, that person that you're talking to and they're maybe still on their computer or on their phone, not making eye contact, you know that they're truly not listening. Also try to put the speaker at ease with your nonverbal cues. So try to be relaxed as you're having that conversation. Concentrate on what you see and hear and not your own interpretation or what your response is going to be. Watch for feelings. Feelings and not facts might be the main message. And try to have a lot of patience. Hold your temper and try to hold your criticism. Technology can also help keep things business-like between parents. Well, parents may be able to explore using technology-based written communications, such as texting or through email or social media, to help keep in contact in a very business kind of manner. So now I'm going to reopen our poll and see if this works. I think what I'm going to have you do is use the chat box at this time. And if you'll just make sure your reply is to everyone. If you can type in what are some of the pros, and just put pro if it's a pro, and what are some of the cons, and just type in con before your comment, of communicating through technology. So if you can go to the chat box and type what are pros and what are cons of communicating through technology. Pro, it is a much faster communication. Exactly, Justine. Evidence of what is just said. Yep, you can keep track, especially through these tax issues, so you can go back and remember. The message is received for the other party. It can be faster. You can also reach a lot of people in a short amount of time. What might be some of the cons of communicating through technology? It can be cold because all of the body language is taken out, and that can lead to miscommunication, like Elizabeth said. And Dee said that the emotion is not heard. Exactly. So there's times when technology can be very appropriate and times when it's not. If the other parent does not use email, don't email them about an important text question. So make sure that it matches because it can be missed, and we certainly don't want that to happen. So in thinking about meeting and sitting face-to-face with the other parents, a few guidelines for meeting with the other parent as you work with families. Make sure you set a time to start the meeting and end the meeting. Have a written list of the points that you want to go through with the other parent. Because oftentimes when emotions get high, you can get into that meeting and forget everything that you wanted to say. And use written methods, whether it's notes or you're typing on a computer, to document any decisions and save copies for both you and the other parent. And double check that you both understand the decisions that you've made. So from this, I want you just to type into the chat what might be one communication tool that you plan to encourage co-parents who have a tax issue to use in the future. Face-to-face communication when they are calm, exactly. Give themselves a little time to cool down. Wait until tomorrow to contact the other parent if they're angry. Thank you, Elizabeth. Yep. All right. I am next going to turn it over to Taylor, who's going to walk us through some really important resources.
Awesome. Thank you. So as Ellie said, my name is Taylor Klutz, and I work for Prepare and Prosper. For those of you who might not be familiar with Prepare and Prosper, we're a nonprofit organization based in St. Paul that provides free tax preparation and financial services to more than 13,500 individuals and families every year. In addition, we run a financial coaching program and assist organizations throughout the state of Minnesota to run their free tax preparation sites during tax time. I'm the Communications and Engagement Manager, so I manage Minnesota's statewide Earned Income Tax Credit and Free Tax Preparation Outreach campaign. So as many of you know, or are hearing it for the first time, tax season is here, if you like it or not, and individuals and families across the state are thinking about filing their taxes. They're gathering all their forms, their receipts, their documents, dusting them off, that really are needed to maximize tax time. So if you work with parents, you have an important role to play this tax season. You can help educate families about tax credits that they might be eligible for, connect them to free tax preparation, and talk about the opportunity that people have to save at tax time if they're receiving a tax refund. So to do this today, for this part of the webinar, I'm going to share 3 resources with you. But before I go into some of the resources, I really want to talk about sort of why tax time is a money moment through one story. So as you can see, this is a story about Angel and her family. Angel came to Prepare and Prosper to file her taxes. And she talked about, when we interviewed her, that, every day she drives her kids to and from, school and to her job in downtown Minneapolis. This year, Angel claimed the Earned Income Tax Credit and then saved a portion of her refund, which was used to pay for a new truck. And she talked about how, in the middle of driving, her truck would stop, so it's sort of scary. But go back about 5 years when Angel started using Prepare and Prosper's free tax preparation site, and she talked to a financial advocate volunteer at the tax site about changing her financial habits. And what she did was she opened a prepaid debit card with her tax refund that allowed her to improve her credit score over 5 years. And over those 5 years, she was saving to buy a new vehicle. And this past tax season, she was able to purchase a new vehicle at a lower monthly cost because she had improved her credit score. So in addition to going in and filing taxes, she really used tax time as a money moment 5 years ago to improve her credit score, and then this year to buy a new vehicle that she used to get to work and take her kids to school. So now sort of talking about a lot of, more than just Angel, about 84% of households across the United States who are making less than $50,000 receive a tax refund each year. And a tax refund, it depends on everyone's situation, but for some, a tax refund can be 30% or more of someone's annual income, and this is sometimes the largest check that they receive all year. So as a result, like your Angel's story, tax time creates a real opportunity for families to save, pay down debt, and make important purchases. And so one of the very important resources that you should know about, and many other people should know about, are tax credits. Right, taxes is confusing, but there are some really important tax credits out there that some families don't claim because they don't file taxes, so essentially they're leaving money on the table. And so an important resource that talks about all of these different tax credits, in addition to the IRS, is the Claim It campaign, which I have the link on the screen, is www.youclaimit.org. And on the website, there's information about the Earned Income Tax Credit and other tax credits. And there's actually an online tax credit guide. So just to go over briefly different tax credits, the Earned Income Tax Credit and the Working Family Credit are very similar credits. The Earned Income Tax Credit is a federal tax credit. Working Family Credit is a state tax credit. They work pretty similar. Basically, you need earned income, anywhere up to $53,000, depending on the amount of children that you have and your income size, the maximum refund for the earned income tax credit this year is about $6,269. And for the working family credit, it's around $2,000. But every year, because income changes for families, for many families every year, some people, about 1 in 5 actually do not claim the earned income tax credit. So if anyone made less than $53,000 in the past year, that's an important indicator that they might be eligible for the earned income tax credit. Another important tax credit is the child tax credit. This is a tax credit for families that work and claim a child age 16 or younger. And if families are eligible for this tax credit, they could claim up to $1,000 for each qualifying child. So it's really important to go ahead and encourage everyone to file taxes, especially if they have children 16 or younger, to see if they might be eligible for the child tax credit. Another tax credit is the child and dependent care credit. This is a tax credit. It's a federal and a state tax credit for families that pay someone to help care for a child or an adult dependent. Additionally, the American Opportunity Credit and the Lifetime Learning Credit are education credits. The American Opportunity Credit can help make post-secondary education more affordable. It's for you or a spouse or a dependent who has attended an eligible post-secondary institution, so that's education beyond high school, such as college, in 2016, whereas the Lifetime Learning Credit is for someone who has attended a secondary institution, but it's also for someone who might be taking some classes to acquire or improve job skills. And the last tax credit that I'll mention is the Minnesota K-12 Education Tax Credit. This is both a credit and a subtraction, so it can either increase the amount of your tax refund or lower the tax that someone owes. And basically, anyone who has a child, claiming a child on their tax return, as was talked about earlier in the webinar, for anyone with a child in grades K through 12, paying for educational expenses, such as things like paper, pens, and pencils. But some people don't realize that you can also taking your receipts from the purchase or rental of musical instruments, including transportation fees for school-time field trips, after-school educational programs, tutoring, or academic summer camps, and computer hardware, educational software purchases. The list goes on and on and on. The Minnesota Department of Revenue has a complete list of all of the qualifying expenses. The message here is for this tax credit and other tax credits, if you have a document, a form, and you're on the fence about whether to bring it, when you file your taxes, go ahead and just bring it. Someone at the tax site where you're preparing your taxes will tell you if you can use it or not. So go to youclaimit.org to find more about these tax credits and if you or the people that you're serving are eligible. So it was mentioned VITA sites. So VITA sites are volunteer income tax assistance, and Minnesota has about 250 free tax preparation sites. Some are VITA sites, which are income-based. Others are AARP tax aid sites, which focus on individuals who are 60 or older but don't have age or income requirements. So if you're helping someone who's a low and moderate income individual or a family, direct them to find the closest free tax preparation site nearest them. So there's a couple ways that you can do this. You can encourage them to call United Way 211. Tell them to, have them ask for help in finding a free tax preparation site. They'll give, their zip code, and the person on the other line will help them find the closest free tax preparation site. If someone wants to go online, they can go to the Claim It website, as I mentioned earlier, www.youclaimit.org. They can also go to the Minnesota Department of Revenue's website, or they can Google free tax preparation in Minnesota. All of the volunteers at the tax sites are IRS certified. Free tax preparation is heavily regulated for a really good reason, because 94% of free tax preparation sites throughout Minnesota, 94% of all free tax preparation, the accuracy rate. So free tax preparation has a higher accuracy rate than paid preparers and self-preparation. And on the note of self-preparation, if anyone wants to file their taxes online for free, My Free Taxes is a great resource. It's for anyone or any household that made less than $64,000 in 2016. My Free Taxes is operated by the United Way. And so my last resource is, as I mentioned earlier, about Angel's story about how tax time can really be a money moment. Here's some data from some of our tax sites at Prepare and Prosper. So when we ask the people that we're serving who are coming into our tax sites, how much money do you have in savings? 44% of our customers, and the average income of our customers is around $18,000, but 44% said they don't have anything in savings, and 39% said that they have less than $500 in savings. Whereas then we ask people, if you are planning on getting a refund today, will you save some of your refund? 68% said yes, they will save a portion of your refund. And I really think and believe that if you have the opportunity to talk to someone about filing taxes, beyond directing them to a free tax preparation site, there's also an opportunity for you to talk about savings. And so to get that conversation started, you can go to the Financial Protection Bureau, the CFPB's website, and I provided a link right there about all the ways that people can save during tax time. So there's some different tools on their website that talks about how you can automatically save with your tax return by doing a direct deposit. They also give information about the U.S. Treasury's new product called MyRA, where someone can deposit some of their tax refund into a retirement account, because not all employers offer retirement accounts. And so, tax time is an opportunity to save maybe for the next couple of months, but also for retirement. So that's a great website for you just to get comfortable and understanding the different ways that people can save a portion of their refund at tax time.
Great. Thank you, Taylor. Now we would like to take our last amount of time for two things. If you have any questions for myself or Claire or Taylor, I'm also going to put in the chat the link to our evaluation for today's webinar. If you click on that link, it will open up the evaluation site. And if you would take just a couple minutes at the end of our webinar to complete that, we would really appreciate it, so we can be sure to continue forward for next year. So what questions might you have? You feel free to talk into the mic with us, or you can put a question in the chat. And I also want to say we really appreciate you being with us today. And this webinar is being recorded. So if you need to go back to listen to any of the information, or if you would like to have anyone else listen to the recording, feel free to share that. Any questions at all? All right, well, we sure appreciate you all joining us today. And if you, as I said, would just take a couple minutes to open up the evaluation, we always appreciate feedback. Thank you and have a great afternoon.